Hello, 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 hello. Sean Brady here with another fabulous podcast for the Medici Mindshare, Mindset, Info, Knowledge Share, all the great stuff. And I am with the one, the only, Bruce Wehner of E3 Wealth.
Hey, Sean, this is a pleasure today. I didn't expect this.
I know, we'll keeping you guessing.
It's very good.
But one thing what did you want to talk about? We were talking about fun stuff all morning and afternoon. But what's one thing that you want to share with our podcast audience? You know, give a little Medici-ness, some of the things we're thinking about and talking about and sharing about. Mm-hmm. What's something you'd love to share?
Well, I think self-awareness is something that people can benefit in all walks of life. And it's a concept that I think people can actually work on and get better at, becoming more self-aware. And there's 4 stages of self-awareness, and I talk ad nauseum of this all the time, and some people get tired of it. But the first stage of being self-aware is you can't even really be self-aware because you're unconsciously, you don't know you're incompetent with some subject area. And people say, "Well, I don't understand that. What does that mean?" It's because you're not even aware of that subject matter yet, or you know it on the peripheral, and you think it's something, but it's actually 180 degrees past that. So you're unconsciously incompetent. You don't even know that you're not any good at that area. So then what happens is, as you delve into something and you get kind of an aha moment, and you go, "Oh my God, everybody knows about this, but I don't know about it." So you become competently incompetent. You know
you're not good at it.
You know you're not good at it, or you don't know about it. And then you start to think, well, first of all, you should be self-aware enough to yourself to say, do I need to know about this?
Right.
Or is it all right that I don't need to know about it, that I'm incompetent in this area? But if you feel like, oh, maybe I need to know this, then you strive for more knowledge. Mm-hmm. And then you go out and you research, and hopefully you're researching people in a variety of different ways, so you don't just rely on one source of information. And then you become consciously competent on that particular issue.
Yes.
And that's a great place to be, because you're consciously competent in that particular area, so that if that comes up in your life, you know that you are competent enough to make good decisions.
Yes.
So that's a good place to be. The place that you can actually live your life, and you ought to really probably try to center your life around from a place of purpose in your life and from a place to build your business, is become the things that you're unconsciously competent. You don't even know you're good at them, but everybody else knows you're good at it.
Right.
Like I would say for you, Sean, you're unconsciously competent at being able to, at a spur of the moment, just take a topic any direction it wants to be taken, and you're perfectly comfortable, not only comfortable, but you're also competent to be able to do that. So that's your gift. You're unconsciously competent to do that. You're probably consciously competent how to take it off this podcast today, how to take that off and put it somewhere else, but you got to think about all the steps.
Yes.
And you're probably consciously incompetent on how to maybe take that podcast from one form to another form. You don't even know how to do it, so you got to get somebody else.
Right.
And there's parts of podcasting that you don't even know about, so you're unconsciously incompetent in that part. You don't even know what you don't know.
Exactly.
So when you said today, what could we share, a Medici insight today, I think that was a good thing to share.
Right.
And one thing in my world, my financial world, that I think that's come up recently is tax reform.
Oh, yeah.
And so a lot of people they are consciously incompetent on how taxes work. So they know they don't know how they work. So they're relying on this tax reform and the talking heads to tell them this is the greatest thing in the world. But in fact of the matter is, there's going to be a variety of things that it's a shell game. Mm-hmm. All they're doing is moving monies around within what I would call your actual tax bracket. And yes, maybe somebody in a middle class situation where they have a family of 4 that makes $80,000, maybe they save $800 on their taxes. Is a savings of $800, though, worth the additional expense now that they may have to become competent with their tax preparer? So now their tax preparer says, well, I used to charge you $350, but now because of the additional changes, I have to charge you $550 or $650. So the tax savings is actually being eaten up there. So maybe you save $200 or $300. So is it really better for the American people,
right,
or is it better for the politicians to say, look what I've done for you? And I think in the long run, because of the additional debt that we're passing on to our children and grandchildren, that this tax cut, and believe me, I don't believe in paying a lot of taxes, but I think tax cutting for the sake of just cutting the taxes and not doing anything on the expense side, cutting programs,
right,
then it'd be like you going home at night and saying to your wife, we're going to just spend more, but we're going to have $800 come in, but we're going to have $1,600 more dollars go out. So that's my little share for today, and hopefully I'm unconsciously competent the way I explained it. Maybe I'm not, but we'll find out.
What do you wish more people knew about the tax situation coming out now? Because I think a lot of people read about it, like you said, they don't understand it. They're like, oh, well, the rich are just getting richer, and I'm staying where I'm always at.
Yeah,
I'm a middle class guy and gal.
Yeah, I mean, there's part of it is just philosophy. Mm-hmm. Part of it is they say, all the rich are getting a bigger tax break than, and I don't even know if that's true yet, because see, Congress hasn't even decided on. They decided on the rules, but they haven't decided on how they're going to apply the rules.
Right.
So really, the people that are saying this is going to make people rich people richer, or poor people poorer, or poor people aren't getting a tax break. Well, the fact there's just some things are facts. I mean, you can say them over and over again, but they're facts. The 1% of Americans actually pay more than 50% of all taxes anyway. And then people say, well, they need to pay their fair share. Well, are they not already paying their fair share? I don't get that part. If the lower 10% of the population is not paying any taxes and are actually getting credits, so they're actually not paying taxes and are getting tax credits, so they're getting a refund even though they didn't pay any taxes, is it really fair to say to them, well, they're not getting anything out of this because they're not getting even more refunds? I mean, those are just facts. Now, we can sit here and argue with somebody all day that socially it's better for people to pay more taxes, for people to then receive more tax refunds on the lower end.
Or subsidies.
Yeah, whatever, however you want to call them. But those are just facts. The other thing I think, from a practical viewpoint, is a lot of people think that a tax preparer is a tax strategist.
Right.
Okay? And
not the same thing.
They are not the same thing. And what ends up happening is a tax preparer, think of it, it's a person who is looking at what already has happened, and a tax strategist is thinking and looking at things that are going to happen. But most people in the United States, they have a tax preparer who they think is their tax strategist, but the only strategy they really have is what they can do from January 1st to April 15th. And there's only really one thing you can do at that time, and that's contribute to an IRA, because you can't even contribute to your 401k after December 31st.
Right.
So that's the only strategy they can possibly do. The thing, I think we've talked about this before, is if you ask this question to a tax preparer or a tax strategist, how can you help me save more in taxes? The follow-up question by the preparer or the strategist should be, do you want to save more in taxes this year?
Right.
Or do you want to save more in taxes over your entire lifetime? Because those are two different questions. Because if I just want to save more in taxes this year before the end of the year, I might go out and buy a piece of equipment. If I'm a business owner, I may hire another employee. I may contribute to a defined benefit program. I may do something like that. But that's only going to save me my taxes this year. It's going just to defer my taxes out into the future. if you say to them, hey, well, I'd like to see if I can maybe pay a little more taxes now, but when I'm in retirement or later on, I'm actually going to pay less taxes,
right,
then I might make a different decision. I just had a CPA on my podcast, and he said, when people ask us that question, we say, we're going to look at it as far as your net worth is involved. Everything we do in tax strategies is going to see if it helps your net worth. And here's an example that some business owners might have heard before. CPAs will often say, well, you owe $10,000 in taxes. If you buy a $40,000 truck,
right,
we can write that off at the end of the year, and now you don't have to pay any taxes on it. However, if you didn't need that truck, now you've actually conflicted with your cash flow,
right,
and you have a $550 payment going out every month that you wouldn't have had in the first place. Well, just so happens the $550 is about $6,600 at the end of the year. So now you save $10,000, but in 1 year you've already eaten up $6,600 of your net worth.
Right.
So all that with a business owner, and you can do this with your personal economy too, but mainly with people that own businesses. You have to look at any tax strategies, how it actually affects your net worth. And I don't think people, and a lot of CPAs don't even look at it like that. Because, Sean, what they really want is they want happy clients.
Right.
So they want somebody at the end of the year on April 15th or March 15th for a business client, if they're a C Corp or an S Corp, they want to be able to say to them, look how much I saved you in taxes this past year.
Right.
They don't look at net worth. They don't look at cash flow. They don't look at the future
right,
payments. So I think those are a couple little tidbits and things that people may find interesting on the podcast.
You mentioned something that I know you and I've discussed a lot, but personal economy.
Mm-hmm.
Can you talk to that a little bit about for people who haven't heard that before, that term, and just share your thoughts on how people could think about their personal economy?
Well, yeah, I think it's more important for non-business owners to think about their personal economy than it is necessarily even for business owners. If individuals would run their households more like successful business owners, they would look at cash flow as being very, very important. And cash flow being that what's coming in every month and what's going out every month. Now, that seems funny because people think they do that.
Right.
But I meet with people all the time that don't realize that they're slowly accruing debt. They're putting themselves in a position where all of a sudden they could lose cash flow by a disability, by a loss of a job, by a death, so on and so forth. And suddenly this cash flow is cut off, or they have a major expense, whether it's the water heater in their house, their HVAC system in their house, the sump system in their house, the cars are really bad in a person's personal economy.
Oh my gosh, yes.
That comes up. And they haven't prepared outside of that. So what they end up doing, they don't have any kind of emergency fund, and they go and they borrow the money. Well, you didn't have enough cash flow
to begin with,
and now you've borrowed the money, and so it affects your bottom line. If you were a business owner, you would do a profit and loss statement,
right,
and a cash flow statement. You would say, this is what's coming in, this is what's going out. There's no surplus here. That's not good. We have to do one of two things. We have to reduce our expenses, or we have to figure out a way to get more money to come in.
Right. And
people say, well, I work my butt off right now. How am I going to get more money to come in? Well, you're going to have to figure that out. Maybe you take a part-time job. Maybe you sell things on eBay. You got to think like an entrepreneur thinks, somebody that can find different levels of cash flow in your own personal economy. Then you have to take a hard look at every single thing that you do in your expense side, whether that's your insurances, whether that's your cable bill, whether that's your car, downsizing the car, whether it's how often you buy clothing. You have to look at all those expenses because you're going to go out of business in a personal way. It's called bankruptcy, just like a business is going to go out of business because they don't have the cash flow to sustain their personal life.
Right. So B, you don't have to be unconsciously competent, but you have to be certainly consciously incompetent that you don't know all these things.
That's exactly right.
Because when people begin to realize what's going on in their personal economy, something does naturally shift. And I've seen it. I've experienced it. I'm sure you've seen a lot of people go through it. It's really, and smart people. I mean, really smart people.
Really, really smart.
Doesn't matter. It affects everyone.
There's a book that I like to refer to. It's called The Millionaire Next Door, and the premise of it is this person doesn't look like a millionaire,
right?
Because they have figured out that living within their means actually gives them freedom and actually enhances their life.
That's right.
Rather than the person that has a pretty good cash flow, but then uses it on all this unnecessary stuff and is at the stress level of bankruptcy basically every month. So you think that they have this wonderful life, but there's this stress behind them that they can't get off the wheel,
right?
The gerbil wheel. And so if more people a lot of times I tell them we got to be aware of your cash flow. And right away they go to this budget situation.
Right.
And budget, we don't like to use the word budget because
it's a bad B word.
Right, because budgets normally tell you what you can't have.
Right.
It's a scarcity mindset. We would like to say we want to do a cash flow awareness so that you know where your cash is going and you can be aware of what parts of your cash is being spent on something else. So you can make thoughtful decisions. So it's really about helping you be free about what you want to purchase or what you want to spend your money on.
Right.
So it's more of an abundance. You're in control now. A lot of people say, well, yeah, I know I shouldn't go to Starbucks every morning, but it's only $4.50.
Right.
But what ends up happening is that $4.50 is every morning and it multiplies per month, but then they forget about opportunity cost on that $4.50.
Absolutely.
And if people don't know, I'd be doing a disservice if you don't know what opportunity cost is now you've lost the opportunity to make money on that $4.50.
The one rule of thumb I heard was, if you take, say, $5, round it up, right? Mm-hmm. Or the $4.50, doesn't matter. But if you take it, the opportunity cost is almost really 10 times out in the future.
Yes.
So that's the easy rule of thumb. Take $5, that $5 coffee is really, would you spend $50 on that cup of coffee today? Because that's really what you're losing 20 years down the road.
Correct. For
that same enjoyment today. How many coffees in the future could you buy for that? I'm sure coffee will go up.
Sure.
I don't know if it's going to be $50 a cup, a super latte.
Right.
But I would think you'd be able to buy at least 3.
Yeah. And the thing is, we're not trying to get clients or people to say, you can't have any fun or you can't have any indulgences in life. We want you to be aware of your decisions. So we want you to be consciously competent about your decisions. People, though, in their personal economy, I have clients that won't open credit card bills. They won't open notices from the IRS. They won't open any kind of what looks like legal notice. They won't open their investment statements for years because they don't want to deal with it in that situation. Then it'll all go away. And the fact of the matter is it's just going to multiply in that situation. So you have to embrace at least becoming consciously incompetent, and then you could go to people like E3 Wealth that have a lot of trusted and vetted resources that can actually help you through the process and increase your net worth and, more importantly, your cash flow along the way.
Excellent. Well, Bruce Wehner, how do you say Bruce?
I say Bruce. But
wait, how do you say Bruce though?
But
how do you say it was Wehner?
I don't really care how. I don't have an ego, the best way to do it from the German pronunciation is Wayner, which is Wehner.
Wehner.
And actually, if you're truly Dutch, you would say Wehner.
Wehner.
But we say in the United States we say Wehner. So
we say Wehner.
Yeah, Wayner, although it's spelled Wehner.
See, all right, There we go.
So I understand people call me all kinds of things. The one I find really odd is they say Werner, which there's no R in the middle of it. But I don't care, Sean. As long as they say hi to me, I don't really care.
Well, it's funny. My name is Sean, and my last name is Brady, but people call me Tom all the time. I don't know why.
I don't know either.
I don't know. My wife is really good looking. Bruce, thank you. Thank you
buddy.
for sharing your wisdom. And hey, everybody out there in social media, we'll see you in social media.
Take care.
What is that mean?
It's a Spree, which is
It's what do you call it?